And good evening. This is Mottek on Money. We're doing it live right here, weeknights in the 5 o'clock hour in Los Angeles, live on the air on 790 KBC, streaming live online worldwide at kbc.com, and the on-demand Mottek on Money podcast at kbc.com, Apple, iTunes, all your favorite podcast platforms. The stock market moving lower today. Investors worried about inflation once again, given the latest readings we got this week. All this ahead of another big Fed meeting coming up next week, and then hot labor summer continues with now an auto workers strike. The United Auto Workers Union going on strike. We also saw a drop in consumer confidence today and gas and oil prices hitting new highs for the year. Mixed finish for the week with the Dow up 0.1%, the S&P 500 dipping 2.2% for the week, and the NASDAQ down 0.4% for the week. Both the S&P 500 and NASDAQ each booked a back-to-back weekly loss. Trading volume pretty thin as a lot of investors started early for the Jewish New Year holiday. Inflation worries keeping pressure on stocks today. Treasury yields edging higher, while investors also expressing concern over the start of an auto workers strike. The United Auto Workers Union impacting the big three car makers, Ford, GM, and Chrysler owner Stellantis. Investors monitoring the start of that strike against the big three car makers. We'll take a closer look at that coming up. On the consumer confidence reading, that came out today from the University of Michigan, showing consumer confidence falling in the month of September for the second month in a row. Not a big surprise, as we've seen in the past. As gas and oil prices move up, consumer confidence moves down. The survey, interestingly, showed Americans think inflation will average 3.1% in the next year, down from the expectations of 3.5% in the previous month, and the lowest reading in 2.5 years. Let's see what happens. On the economy today, the New York Fed released its report, the Empire State Manufacturing Survey, with the Business Conditions Index climbing slightly this month. Economists expected a negative reading on that. The Fed said the industrial production in the U.S., meanwhile, rose 0.4% in August, and that exceeded the 0.2% gain most analysts were expecting. Looks like there could be a big media deal in the works. Walt Disney stock up 1.3% after a company representative said it has not yet decided on what it will do with ABC television and other broadcast channels that CEO Bob Iger has suggested could be sold. Reuters is reporting media entrepreneur Byron Allen, based here in Los Angeles, has made a $10 billion bid to buy Walt Disney's ABC television network and assets, including the FX and National Geographic cable channels, according to a spokesperson for Allen today. Disney has also held exploratory discussions about selling ABC to regional TV station operator Nexstar Media, according to people familiar with that situation talking to Reuters. The discussions come after Disney CEO Robert Iger said in July the company could sell some of its traditional TV assets, which have struggled for years due to the rise of streaming services. Coming up this hour, I'll be discussing all the hot labor summer developments with labor attorney Thomas Lenz, partner with the law firm Atkinson Andelson in Pasadena. He serves as lecturer in law at the USC Gould School of Law and previously served as chairman of the Labor and Employment Section for the California Lawyers Association. A new report based on the Treasury Inspector General for Tax Administration, that's the IRS watchdog, says the IRS is not going to limit its increased audits to taxpayers with incomes over $400,000 or limit them at all. As President Biden has claimed, the IRS will simply expand audits for everyone under the so-called Inflation Reduction Act. Meanwhile, another report out today says the IRS has halted a pandemic-era small business tax break following a flood of potential fraud claims. I'll discuss the latest tax news with America's leading taxpayer advocate, advocating for you, Grover Norquist, the president of Americans for Tax Reform. But first, on your money, the markets, the economy, inflation, the whole works tonight. Joining us live now, investment expert Brian Perry, chief investment strategist and portfolio manager at Mint Asset Management at mintassetmanagement.com and author of the 25% Cash Machine. Brian, thank you very much for taking the call. It's been a while since we've chatted behind live microphones, so give us your assessment of this action this week.
Great to be back with you, Frank, and thank you, everyone, for listening in tonight. There's a lot going on here. Today's negative close here really kind of clipped the mojo that was starting to lead up into an end-of-the-month quarter-ending window dressing type of a scenario that most people expect, coming into late September here. Rising bond yields here, rising oil prices, a little bit hotter inflation because of higher energy prices. And, you've got also, some news out of China, which is like they're looking like they're with the restrictions on the iPhone in the last week here, a very unimpressive mixed results with the iPhone 15 launch. Just a number of things here that's a confluence of short-term negative, impactful things that really kind of took the buzz out of the market here for this later part of the week, and today certainly with Taiwan Semiconductor instructing suppliers to delay chip equipment shipments because of what they consider to be maybe a backup in demand. That all weighed in heavily into the market's sentiment here today, along with just the idea that you had triple expirations, options expiration here today as well. And it just kind of all came together here, and people just started to take money off the table. So I don't think it's anything major league that took place today. You had a really good IPO here this week with ARM Holdings coming in at they priced the deal at 51. It traded as high as 65. It closed today around 60. A very strong opening. You have Instacart come out here next week, which is also supposed to be in high demand. So the IPO market's starting to wake up here a little bit, and with bond yields here, it's still ratcheting at the higher end of the recent range. Because of these inflation numbers here, although actually, under the hood, even though you had hot food and energy prices, renters equivalent index was down, as well as some professional services. Wholesale service costs were also falling. So some of the core components to the inflation numbers this week were actually pretty good. So I'm hopeful that strikes a chord with the Fed, because we've got this meeting coming up next week, and a lot of people I think are just going to wait to see how the Fed comes out with their policy statement before they commit new capital to the market. And in that kind of a situation, and you have a UAW strike right now, which is also weighing on the market from the standpoint of this is about wages and U.S. policy and EVs, the whole industry here. It's a big deal here because both sides are really nowhere to any kind of meeting any kind of interests that are mutual, and this is going to take up to some time here to resolve this. This was a targeted strike, Frank. The Ford plant, a GM plant, and a G plant were all targeted for these big walkouts, and while there's an inventory of excess vehicles at the very moment, the factory discounts will stop in about 2 weeks, and then the parts supply chain will start to seize up here a bit. So the real winner in this whole strike is Mexico. When you think about it, companies are going to divert more of their production down there, and that's not okay. From the standpoint of, because it really when you're making EVs, they take actually 70% fewer parts. And you got this UAW strike, which these workers want to do a 32-hour week and get paid for a 40-hour week, and guarantee jobs. And it's just I don't see that as it's a non-starter. So this could go on for a little bit of while here, and I just look for which is kind of a blemish on Biden, because he's a very pro-union guy. And it just, it's going to weigh heavy here in the narrative here going forward here for the next few weeks. So where this leaves us here is a market that's kind of like twisting in the wind a little bit here going in the end of the month. But I do think that with earnings season around the corner, we should see some very nice year-to-year comps. You got the GDP, the Atlanta Fed GDP now looking for about a 5% plus inflation rate here for the third quarter. That's very bullish. And with that in mind, then that should be pretty good year-over-year comps for a lot of the S&P 500 companies. The dollar's been strong, so that's a little bit of a negative on the multinationals. But it's good to see the currency holding up well in the wake of higher interest rates. All that said, I think the market's still technically strong, holding together well. You had a big kind of a pullback today in a lot of ways, where it's just like people just decided to take some money off the table. We've had a lot of big gains year to date, and it's just I think people are going to do a wait and see thing here between now and when the Fed meets versus and then coming into the end of the quarter here, and then into earnings season, which is about when it really gets launched here, Frank, about 3 weeks out.
All right. And P.S., oil prices hitting a new high for the year. Right now in New York, we're looking at oil above $91 a barrel. In London, it's above $93 a barrel. gas prices hitting new highs for the year here, certainly in the Los Angeles area, and the same may be the case elsewhere. What about that important component, which appears to be impacting consumer confidence already, and might it impact the Fed next week? And everyone seems to be comfortable with the idea that they're going to pause again, but given the fact that inflation is coming in hotter than expected, and now this price rise in energy might be we in for a surprise next week.
No, I don't believe so. Right now, the bond futures are predicting a 97% chance of the Fed holding tight, and I think they will do that. However, because when they look at core, which came in at 0.2, 0.3 on the CPI and PPI, that strips out energy and food. However, most people, when they go, they live their daily lives, that's the first thing they do is go to the grocery store and the gas station, and it affects the consumer sentiment, which came in lower today, about 2 points lower than forecast. So that this alone will certainly help the Fed determine that, maybe we shouldn't raise rates further because higher food and gas are already starting to do the job of slowing consumer spending. And that may be true. We don't know that yet. However, there's a 35 to 37% chance that the Fed will raise rates in November or December, and they may just do that, Frank. They may go ahead and raise one more quarter point here just to kind of insulate inflation, hopefully once and for all. And I don't see that out of the realm. I don't think that's a game changer for the market either. I think that the bond market's already pricing that in, and the market can well live with that because we lived with 3 to 4% inflation, long before the 2007-2008 crisis here, and the markets were able to, do quite well because it allowed for good wage increases, profit margins, as well as a good market overall. So I think we're normalizing back to what we used to be, before, we're almost 20 years ago before we started all the stimulus stuff, and it really does give a chance for things to kind of reset. And I think that's really what's going on here with the market, and that's why we haven't seen a major pullback like a lot of people predicted.
All right, what are your thoughts about how all this labor action is affecting so many industries now? Now the auto industry, of course, the media business. Hollywood's been shut down by the writers and actors strike, and the media names have been impacted. The hotels, certainly locally here, have been impacted by various job actions. What are your thoughts here on the auto stocks, the media names here, including Disney, which might be unloading ABC television at some point, and even the hotels in this environment?
Well, you are seeing a labor movement, no question. And a lot of that is going to be a presidential pivot, or talking point here for the Biden administration going forward here. There's definitely a chase to keep up with the cost of living, and rightly so. So the affordable housing problem is continuing to be a big problem for most new household creation out there, and I just see that we're going to continue to have to address all these different industries that are going after a better wage package, benefit package, something where it's sustainable to keep up with the cost of living. That's a cycle here that we're all going through, and I just don't see it really resolving itself until really we start to see prices of all things start to come in, and that's going to take it's going to take a longer time than most people bank on, Frank, because inflation, once it's out of the bottle, it takes several months and quarters for that to come in and sustain itself. So we might have peaked in here, but we're going to be up here for quite a while longer, and it's going to continue to put pressure on employers to satisfy workers. At the same time, there's the job market is starting to soften here. You're starting to see a lot of things that are starting to come in on the labor front, which is also weighing on this as well. So I think you're going to see, a balance here, and this is really hard to call, is a balance of wages and also employers cutting back and also negotiating their way through this period of time where it just you can't make money if you got to pay people excessive salaries and you can't charge more for your products. And so we're kind of at that crossroads.
All right, given what you've laid out, Brian, so expertly at this point, let me ask you the big question here. Where are you putting money now and/or taking it off the table?
Well, you had a big pullback here in a lot of big names here. So I do like Amazon here on a pullback here. The stock is breaking out nicely. Salesforce.com, CRM had a wonderful quarter here, breaking out, going higher here. These are AI stocks. I do like General Electric here, still making motors for the Boeing and other airlines here. Google still acts very, very well here, despite the FTC. That's going to take some time to work out here, this lawsuit with the FTC. EQT, biggest natural gas company in the world. You can buy that in the shoulder season here before the weather gets cold here. That looks good. IHG, apparently 22% of Americans are going to be traveling overseas here over the next year. So they own intercontinental hotels. Quite good. And for those that want to play the emerging markets here, I think the purest play on that is Macro Libre, MELY, which is the Amazon of Latin America. Check that out. In the energies patch, Transocean, which is a really interesting drilling stock. RIG is a symbol there. And right in your neighborhood here is SoFi, SOFI. Really great online banking, no brick and mortar risk. Attracting a ton of money from the millennials here. Uber looks good, and huge insider buying in Broadcom here. AVGO, $9.6 million insider buy. Another AI company that's actually monetizing here and taking off. I still like things that are really levered into China here, whether it's Starbucks or Nike, McDonald's, and Oracle really laid an egg here with their earnings here, and calling themselves a big AI trade when in fact they're really not.
On there live with Brian Perry. And what about that big IPO this week? Brian, you mentioned it earlier, ARM Holdings. They had that big 25% pop on its IPO day. Any thoughts about that one here?
Yeah, there was a lot of chatter about it here, and there's just a ton of money on the sideline from tech funds that need a new name, a new component in their portfolio. So they bought it on the opening here, traded up to like 64, 65. Yeah, the return on equity, Frank, is literally no more than 10%, and it's a necessary component to smartphones, laptops, just about everything, that is a mobile device. But those industries and those sectors are not really on fire right now. So, despite the fact that it's a great company, it's being touted by the CEO of SoftBank as the next big AI play. This was 10% of his holding that he brought public, and I assume that in 60 days here, they're going to be a lot of when the restrictions to sell are lifted, that there'll be a lot of insider selling in this as well. So I'd be careful here. I think the stock will pull back into the low 50s, but it is a good long-term core holding, but at the right price.
Right. And would you be touching any of the auto names or the media names at this point?
Not necessarily. However, with Disney here starting to talk about selling assets, whether it's ESPN or ABC, other things, that this is the sum of the parts is way bigger than the whole. So as much as it's been a dysfunctional trade here for so long this year and last year, this is getting interesting here, down at 80.83. So today traded up $1 against a negative tape. At 85 spot 88 or 58, it's worth taking a hard look at. I think Iger is going to start to dismantle this company and start to sell off assets at premiums.
Brian, thank you very much for that thorough analysis to wrap up a big week here. That is investment expert Brian Perry, Chief Investment Strategist and Portfolio Manager at Mint Asset Management at mintassetmanagement.com. He's also the author of the 25% Cash Machine, longtime contributor to this program for decades now. Brian, thank you very much for that update here tonight.
Very good. Thank you, Frank.
Thank you very much, and have a great weekend. Now, right after the freeways, we go here on 790 KBC. Folks, let's be honest. Sometimes we find ourselves or a loved one dealing with a massive injury caused by a terrible accident by no fault of our own. Sometimes it's simply being the wrong place at the wrong time. We're good at preparing for earthquakes and fires, but let's not forget to prepare in case we're involved in a major accident. It's critical to know exactly who to call first. Clark Fielding became a lawyer to help you in a crisis. Fielding Law is focused on justice and resources for you because they understand how the system works and what to do in the most horrific situations. I always say to put the Fielding Law team in your phone under the word accident, so all you have to do is press dial. Believe me, you will feel better having set this up for yourself and your family in advance. 833-88-SHARK's the number, 833-88-SHARK. With the population exploding out there and increased vehicles on the freeways, be proactive, prepare for the worst, and expect the best. But if and when you need help, call Clark and his team of Sharks at 833-88-SHARK. Again, the number is 833-88-SHARK. Or go to clarkthesharklaw.com. Again, that's clarkthesharklaw.com. 790 KBC welcomes the Rocky Horror Picture Show 48th Anniversary Spectacular Tour coming to the Saban Theater October 8th. Tickets are on sale now at AXS.com. Right now, caller 9 wins and 1-888-790-5222. You can get a pair of tickets to the show if you're caller 9. Call now, 1-888-790-5222. Mottek on Money continues here in 790 KBC. Lower finish to the week on Wall Street. The Dow down nearly 300 points today, down 289 at the bell at 34,618. The S&P 500 slipped 55 at 4,450, and the Nasdaq gave back 217 points at 13,708. The yield in the 10-year note, 4.33%. Looks like the Dow eked out a slight gain. The other major averages pulled back for the week. We see mortgage rates ticking higher this week as well. Looks like the average 30-year fix is now 7.18%. The average 15-year fix at 6.51%. Those hovering at or near 21-year highs. Taking a look at the cryptos now, we see Bitcoin up about 300 at 26,712, Ethereum up 22 at 1,643, and Doge at 6 cents. The price of oil kissing new highs for the year this week. Oil up $1.04 at the close today at $91.20 a barrel. That's the price in New York and London, even higher. The global benchmark Brent crude oil up 43 cents today at $93.37 a barrel. At Southern California gas pumps, the prices where they matter here, $5.65 the average price for regular, $5.97 the average price now for premium, both 23 cents higher than a year ago. $6.31 is now the average price for diesel. That is 1 cent higher than what truckers were paying a year ago. General Motors shares closing down 0.9%, Ford shares down 0.1%, and Stellantis shares moving higher, up nearly 2% after nearly 13,000 UAW workers at the three companies went on strike first thing this morning. Disney shares moving up 1.3% after a company rep said it had not decided on what it'll do with ABC television and other broadcast channels that CEO Robert Iger has suggested could be sold. Shares of Planet Fitness tumbling nearly 16% today after the company announced the departure of its CEO. ARM Holdings getting attention this week. That's the company that had a big pop on its IPO day this week. American depository receipts ending 4.5% lower today from the stunning market debut we saw the day before, after closing Thursday 25% above their IPO listing price, as executives see a big opportunity in saving chip makers money. Now the latest news for you right here on 790 KBC. Folks, I'm not exaggerating when I say this. QC Kinetics can change your life. You can live again without that chronic joint pain and without drugs or surgery. It's Frank Mottek here. QC Kinetics is advanced regenerative medicine. They take your body's own concentrated healing properties and put them right into your joint to restore and repair that damaged tissue that's causing all that horrible pain. The patient satisfaction reports are absolutely astonishing. Finally, a real alternative to the old ways of dealing with pain. And unlike surgery, there is no downtime with QC treatments. If you have constant pain in your knees, hips, shoulders, or back, you need to call and get a free consultation from the medical professionals at QC Kinetics today. Imagine this fall moving around pain-free, doing things you love again, walking, hiking, playing with kids, you name it. Call QC Kinetics and see how the latest advances in precision regenerative medicine can attack your pain and bring you lasting relief. Your grandkids will thank you. QC Kinetics, locations in Glendale, the city of Orange, Mission Viejo, and now also in Costa Mesa. Call 213-997-PAIN. 213-997-PAIN. Again, that's 213-997-PAIN. Mottek on Money continues here in 790 KBC. A mad dash to fund the federal government continues, and it's shutdown watch time again on Capitol Hill. Meanwhile, a new report based on the Treasury Inspector General for Tax Administration, which is the IRS's watchdog, says the IRS is not going to limit its increased audits to taxpayers with incomes above $400,000 or limit them at all. As President Biden has been claiming, the IRS will simply expand audits for everyone under the so-called Inflation Reduction Act. Meanwhile, another report out today says the IRS has halted a pandemic-era small business tax break following a flood of potential fraud claims. Let's bring in America's leading taxpayer advocate now, America's tax watchdog, Grover Norquist, president of Americans for Tax Reform. Grover, thank you very much for taking the call. First of all, on this news today about the IRS halting a pandemic-era small business tax break, that is big news for small business people here. Give us an update on that, first of all.
That one I'm not actually up to speed on as much. I was prepared to go through the conversation about the new news that they're going to be taxing everybody, not just
Which is not a big surprise either.
Not just the 400,000. Look, Biden was elected on one big fib, and that was he never raised taxes on anyone, never mind family, anyone who earned less than 400,000. And that way he got out from under the Democrats will raise your taxes. He said that's a lie, won't do that. Only raise taxes on them, the other people. He got into office, and of course he's raising taxes on energy, which hits everybody. And this audit question, when they put $80 billion now down to 60, because the Republicans are able to take $22 billion out of the 80. They're planning. CBO did the look, and they said, how are audits going to go up? CBO, the nonpartisan, actually skews a little towards the Democrats committee, they're going to be 700,000 new audits on people who make less than $75,000 a year. Okay, $75,000 a year is a lot less than 400,000, and 700,000 new audits is a big number. They intend, CBO says, they think they'll raise $20 billion from those people. And then, of course, the Democrats, the reason they got that the spending bill, the Inflation Reduction Act, I think now they wish they hadn't called it that, because it reminds everybody that they created the inflation and it's back again. People weren't going to vote for it because they feared that the IRS numbers and spending would go after average citizens. So they got a letter from Janet Yellen saying, we don't intend to do that right now. And that was taken as we're not going to do it. But the bigger hint would have come when 50 Democrats voted no to a law, which the House Republicans supported and passed, that would have said no increase in audits on middle-income people. So exactly what Biden said he wanted, what Janet Yellen said she'd do, but they all got the word from the White House, don't actually make it a law. We're just telling people that. And we're now learning that when the Inspector General, as you point out, went and talked to him and said, how are you going to show that you're not doing additional audits on people under 400,000? The IRS says we have no intention of promising not to do that. In fact, the number, which they say for rich people used to be $200,000 back about 30 years ago, and that's when they set the number at 200,000. So they do divide how many people we audit above and below 200,000. They could, as the Inspector General said, set that at 400,000. Then we'd be able to tell if the president and Yellen and the Democrats were lying. The IRS says we have no intention of doing that because it would take away our agility, our ability to audit as many people as we want to make less than $400,000 a year. This is an incredible betrayal of the American people by Biden, by Janet Yellen, by the Democrats in the Senate, by the IRS. When they said they wouldn't do this, that's how they got trillions of dollars of spending passed and tax increases passed on that promise, and that turns out to be not true.
And, of course, news like that always comes out late on a Friday, and it's buried. So thank you for highlighting this, and you're absolutely right. It's outrageous how people have been misled about all that.
Well, it is, but it was a central part of his campaign. And before him, Obama said he'd never raise taxes on anyone who made less than $250,000 a year. And then pretty soon they switched that to any family that made less, individual. He said, so that they keep pushing down the number as to where they're going to be raising taxes and where they're going to be doing more audits. And now Biden and the administration and the IRS says all that talk about targeting rich people is just that. It's talk. We will audit who we want to, when we want to, and for whatever reason we want to, which always legally was true. I mean, the law that was passed didn't protect lower-income people. The Republicans had an amendment that would have protected lower-income people, but as I pointed out, the Senate wouldn't vote for it. The Democrats in the Senate all voted no, because they knew entirely during this whole time that the whole point was to audit many, many people, and their real target was small businesses. They think that small businesses are the people who aren't paying taxes. General Motors pays its taxes. It's a public company. It's there's no way to pretend that it's all public information. They can't hide anything. They're quite convinced that the local grocery store is the problem.
Definitely very big news, and appreciate you sharing your insights on that with us. And before I let you off the hook, here it is, September 15th already. What's going on there in Washington to fund the government, and will there be a deal by the end of the month, and or will the government have to shut down again?
Two things. One, we don't know which way it'll go. And I do know that whatever happens, if either the Republicans vote no or the Democrats vote no, the establishment press will announce the Republicans close the government. You can remember back to 1995 when Newt Gingrich and Bob Dole, the Republican leaders in the House and Senate, passed a bill, a budget, and then Clinton vetoed it, and it was announced that the Republicans had just shut down the government because Clinton vetoed the Republican budget. So it really doesn't matter what they do. ABC, CBS, NBC, and government radio, PBS, will all announce that the Republicans closed the government. One, it doesn't matter. These things have closed for an hour, a day, a week or two. It changes nothing. Everybody who goes off payroll for a week gets paid back. And it's a lot of talk. The damage that could be done, and in Virginia, there's an election in November as to who's going to control the state Senate. If the Republicans win the state Senate, then they'll have the Senate, the House, and the governorship, and they will do three things. They will vote for school choice. They will phase the income tax down to zero over the next 10 to 15 years, and they'll pass parental rights. This would help make Virginia a Republican-red state. That would change the balance of power in the country. The Republicans would no longer have to try to win Wisconsin or some very margin or Michigan if they had Virginia in their pocket. A government shutdown affects Virginia more than any other state because there's so many government workers there. So the only real damage there would be the Republicans running for state Senate if there's a shutdown. So my hope is they come to some sort of agreement. It'll be awful. I mean, Democrats have the Senate, they have the presidency. We're not going to get a good one.
All right, Grover. Well, thank you very much for that thorough assessment, and thanks for being our watchdog there. That is Grover Norquist, your taxpayer advocate, watchdog extraordinaire, president of Americans for Tax Reform, live with us here tonight on Mottek on Money on 790 KBC. It's Frank Mottek here. Innovation Refunds has been helping small businesses that qualify get a business payroll tax refund through the Employee Retention Credit, also known as the ERC. The ERC is a tax refund for businesses that kept employees on payroll for parts of 2020 and 2021. If you own a business with more than 5 employees, you could have money waiting for you. They understand the importance of your information and have industry standard certifications to back it up. If your business faced challenges during the pandemic that it would not have without pandemic government orders, you might be eligible for a substantial refund. Go to innovationrefunds.com to see if you qualify. Innovation Refunds has hundreds of 5-star reviews on Trustpilot, Google, and they're accredited by the BBB. There's no upfront fee. They don't get paid unless you get paid. InnovationRefunds.com. That's the website to visit now, or call 1-843-REFUNDS. That's 1-843-REFUNDS. Innovation Refunds does not provide tax or legal advice. They work with an independent network of tax professionals and will share information with them to evaluate and process your claims. Terms and conditions apply. Mottek on Money continues here on 790 KABC. Good evening. The hot labor summer continues. A lot of unprecedented things going on. A bill that would make striking workers in California eligible to receive up to $450 a week in unemployment insurance benefits, passing in the state Senate yesterday. That bill passed the Assembly last month, now heads to the desk of Governor Newsom, who can either sign it into law or veto it. Today, the United Auto Workers Union went on strike and announced plans to resume bargaining tomorrow after launching its first simultaneous strikes at GM, Ford, and Chrysler parent Stellantis. With effects of the limited shutdown starting to spread today, the most ambitious U.S. industrial labor action in decades, halting production at 3 plants, producing the Ford Bronco, Jeep Wrangler, and Chevy Colorado, along with other popular models. Meanwhile, in Hollywood, talks between the Writers Guild of America and the major studios set to resume next week as the sides seek to end the 4-month-old writers' strike. The actors' strike continues as well. Watching all of this closely is attorney Thomas Lenz, partner with the law firm Atkinson Andelson in Pasadena. serves as lecturer in law at the USC Gould School of Law and previously served as chairman of the Labor and Employment Section for the California Lawyers Association. Thomas Lenz, thank you very much for taking the call. There's certainly a lot to lecture about these days, given these unprecedented times. First of all, on this UAW strike here, and certainly Southern California is impacted since we're the largest manufacturing region in the U.S., supporting the auto industry in many ways. This is going to have a big ripple effect. Give us your reaction to the latest news here.
Well, Frank, I think you said it perfectly. It is a ripple effect because when employees go on strike, you basically have a hiatus in business. And if you're supplying that manufacturer, if you are working with materials, whatever it might be, you suddenly have a glitch in your chain, and it's going to affect a lot of people along the way, and that can certainly spread to lots of places in the economy.
Certainly, and looks like they're going to talk again tomorrow, but looks like what the union is asking for is a pretty big ask, a 40% wage hike. What do you think of that?
That's a large hike, and I think it's common that people go to the table asking for more than they expect to get, and I would be very surprised if they actually believe that they will get 40%. But do they feel that they could get something approximating that, half of that? Hard to say, but I think that the amount of strike activity and the amount of protection that the current National Labor Relations Board and administration are giving labor and its advocates, it is something that is empowering people to ask, to speak out, and to walk out.
All right, closer to home on the governor's desk now is this bill that could provide unemployment benefits to those people in the WGA and SAG-AFTRA who went on strike. That also would be unprecedented. What do you think is going to happen there?
Well, that would be a game changer in terms of strikes because there is a big sacrifice normally under current rules with strikes, and employees either need to get behind what the union is seeking or voice their discontent with that, and because there's a big sacrifice, and it's going to be a loss of pay for whatever period of time that people are out on strike, walking the picket line, whatever that strike activity may entail. So if you have unemployment subsidizing that strike activity and giving people a lifeline that they didn't previously have, because the existence of strike benefits is really, I think, something on a case-by-case basis, depending on the resources of any union. It's going to, I think, give employees more of a security blanket to say, yeah, we can do this. We can walk out with less repercussions and be able to feed the family.
So if he signs it, basically businesses would be funding strikes against themselves. So we're all eager to see what happens. Of course, tough times for a lot of people right now. Thomas, wish we had more time, but hopefully we'll get a chance to speak with you again on all these big issues here. That is labor law attorney Thomas Lenz, partner with the law firm Atkinson Andelson in Pasadena, serving as lecturer in law at the USC Gould School of Law and previously serving as chairman of the Labor and Employment Section for the California Lawyers Association. Thank you very much for joining us live here tonight. This is Mottek on Money on 790 KBC.
Afford Anything talks about how to avoid common pitfalls, how to refine your mental models, and how to think about how to think.
In the world of money and investing, it can be easy to be dogmatic about your beliefs. You're part of the FIRE movement, Financial Independence Retire Early, or you hate it, you hate it, you hate it. And either you embrace credit cards as a route to getting airline reward, or you follow the Dave Ramsey camp and believe that you shouldn't touch them because if you play with snakes, you might get bit. Afford Anything, wherever you listen.